Hello guys, the Forest here. Welcome back to my channel. So today I want to explain a trade I was supposed to take this morning. I didn't. I was awake actually because I slept off late last night. So this morning I didn't wake up early. So I missed the trade actually. So this is the trade. It's on Euro USD. Euro USD. So this is what happened. On the norms yesterday, day before yesterday, sorry, we had CPI. So the CPI took out so many of the buy side liquidities that are here. From here, this one, and stopped over here at this other block here. So this is where the CPI stopped. So, and also that day before yesterday, we have an inverse this thing here, an inverse fair value gap. Okay, I hope you can see my chart. So we have what, an inverse fair value gap over here. So when you come down to the lower time frame, 4 hours. Okay, let's go to 1 hour actually. Let me show you what happened. So yesterday during the New York time frame, during the New York time, which is over here, that's from 8 o'clock, there was PPI yesterday. So the news came up and took out what, this structure. We had the market structure shift over here yesterday after the news. Then I waited for the market to come back to this fair value on 5 minutes time frame. So the came back to this. So I took this trade actually yesterday. My stop loss was 70, yes. Then 35 was my take profit. That's 83, 1.0835 was my take profit yesterday. Like this. Okay. So on the norms, I was expecting the market to go down a little bit. You get. Then after the market took out this downside into this inverse fair value gap, the market started going up again. And on the 15-minute time frame, we had this fair value gap here. So after this market tapped into it, things started coming down. So let's come to today now. So today, this early morning, I was actually sleeping. I wasn't awake. So the market took out this low. We are still inside what, this inverse fair value gap. We took out this low like this. And the same thing happened on the DXY actually. Come in. On 1 hour time frame, this is your DXY. This is your DXY. Let's come to 15 minutes. DXY, we took out this high here. Yesterday's high. Come, let me off this thing. So we took out what, yesterday's high. This is Wednesday, 9:45, and this is what, okay, still Wednesday though, but during the Asian time frame. So we took out this low. The same thing happened here. Okay, so after we took out the low, when you come to 5 minutes time frame, you will notice that this swing here was the last swing that happened before this down this low was, this stop point here happened. This was the last swing before this stop point. The last swing before what, this stop point here. So you mark it. Market structure shift. Market structure shift. So this is what happened here. Market structure will shift. So during this Asian time, this market started going up, and the market opened around this side. This time, this is our daily open here. Our daily OP. Let me write it as daily OP. Okay, so the market opened over here, went up, came down, went up again, then this market came down. And I told you guys, whenever you are trying to take a trade, you are looking for your setup, actually try to align it with quarterly theory, you get, so that your setup will be very nice. Like my the last video I did, I also said the same thing. So here, when the market opened, the thing went up. This is what, from 12 o'clock to what, 1:30. That's what you should be looking at for. So from here to here, we had what, we had consolidation. Thing went up, come down, went up again. We were consolidating. Then during this 0 to 139 is called what, the accumulation. Then we are supposed to be looking for our manipulation. This is our manipulation from 1:30 to 3 o'clock is our what, manipulation. Okay, so here now you notice that, okay, after this open price, this was the last swing we had. But when you come to your DXY, you notice something, the same thing here. This is our open. I'll go to the lower time frame. This is our open of the day, daily open here. Okay, so this was the last swing, 45. That's 12:45. The same thing here, 12:45. So when you mark it now, you will notice that we had what, a stomp hunt. We had what, a stop hunt over here. But the same thing didn't happen here. This stop hunt didn't happen here. Meaning what, this market turns to what, a divergence. What happened there is what, it's called smart money what, divergence. So that's what happened here between the XY and Euro USD. So what we're going to do next, we'll wait for what, break of market structure over here. So because of this divergence now, we're not going to be looking for a break with body. Anyone you see, you take. Okay, anyone you see, you actually take, because in this case we have what, fair value gap, and this fair value gap happened on this line, this daily open. That's where the fair value, and this is DXY. So let's come to our Euro USD. On Euro USD now, you notice that, okay, after the divergence, we had what, break of market structure. We had break of market structure over here, and this break didn't just happen here. This stop point that happened here on the higher time frame here, this stop point, the last swing that happened actually got broken here. Can you see it? So we call this what? We call this a market structure shift. So what you're supposed to do here is to wait for the return to this place. Wait for market to return to this what, fair value gap. You can also use another confluence. When you check like your Fibonacci, when you draw your Fibonacci, you notice that, okay, this is what, your 50%. This is another confluence now. This is 50%, and this is also what, a breaker. So you mark it from here. So what was that point? What's the number on this point now? That's 1.08401. So you wait for this market to get back to this what, point. So immediately you saw this movement here. Immediately this movement happened down to this place. You take your trade, you buy, because it is what, it is very legit. We buy from where? From here. So had it been I was awake, this is what I would have done. This is how I would have taken this market. Then my stop loss would be here, or you can bring it to what, to 5 what handles here, 5 pips. Where will your target be? This is where our target will be. You check, you notice that, okay, here we have what, equal lows. We have what, equal low. We have equal low here. That's what, low resistant liquidity. So we have what, an equal low here. Okay, we have equal low, and at the same time, this is also what, our Asian high. So it's what, equal low plus what, Asian high. Equal low plus Asian high. That's what happened here. Asian high. So this is why we are supposed to enter this trade. This is how I'm going to take this trade. Then my target will be where, over here. Immediately after the high, I close the trade. Okay, so the risk reward here is what, is 1 to 3. Can you see? So this trade now is very what, it's very nice actually. So I wasn't happy when I woke up and I saw that I missed it. I woke up around this place where the market was here, over here already. So I couldn't enter. This is 8 something my time frame. That's 3:30. Okay guys, this is where I'm going to be stopping, okay? I hope you learned something from this trade actually. Thank you for watching.